Do not, for any reason, ever share your private keys, passphrases, passwords, or click suspicious links. Everyone all the time is trying to steal your stuff, so go slow and be careful. There's no point making all this money just to give it to a thief.
All right. Okay, let's see. What do we got going on? Oh, I should have played that little thing that's like about all the douchebags. I'll play it later. Let's see. Well, we'll have some announcements to make. Well, okay, first, we just got finished recording from Geneva, Tufi. So rather than hold that episode of This Week in Hypercycle until tomorrow, normally it's Wednesday morning, but Tufi and I have decided to go to the 6-day week instead of 7 days. I mean, if God could do it, I'm sure we can do it. So we're going to try to get the episodes every 6 days. So in sticking with that, this episode, instead of tomorrow morning of This Week in Hypercycle, will go at 10 a.m. here in like 2 hours. So that will be live. Yay. And it's a little spotty because he's in a taxi going to the airport in Geneva. So anyway, that'll be cool. Leary, yeah. Good for him. Morning. All right. Let's see. Okay. So yeah, 10 a.m. So basically 2 hours from now, This Week in Hypercycle. That's cool. That'll be fun. All right. And just more of the kind of build up towards the 15th. So not too long. Let's see. It's a good day. I got my tokens to fill 2 nodes. Good job. Average price 57. Nice. I haven't even looked at the price in a few bits. But we will have some more things to say about the OTC market, which is this. And okay, real quick, let's do some kind of like commonsensical stuff. When you see it says it's a under development, that means don't buy stuff because these are not the real tokens. It's just this is like the development site version, which we will roll out in a few days. So yeah. So for that, you can go here and you can mess with it and you can kind of see how it works. Got it. I understand. So there's going to be several parts to this. 1, token search. You can search tokens. Yay. 2, you can view the exchange. 3, you can buy node licenses. If I want to buy node licenses, I just click on buy node license and look what I've got. I can get in line for the Hyper AI box, which ships on October 15th, by the way. And they don't have a final price for that. But these are the node bundles with tokens. Listen, for a lot of people that are like, oh man, we're going to talk about today slippage, price impact, order books, things like that I don't think people are super paying attention to. We try to discuss this and people go and I get emails and messages about people that get absolutely obliterated because you're not going through a centralized exchange. When you're going to DEXs, you're going to get beat up with the problem of low liquidity. I mean, you're going to get your ass kicked. And so like, I would urge everyone to just understand these effects because if you're going and buying big chunks of tokens, so for instance, if you're buying a 256 bundle of node licenses, and you want to marry them on the 15th, marry the tokens to the node licenses, that's 262,000 tokens, 262,144 tokens. You can't get that filled. Can't be done without huge price impact. Man, I'm talking about ugly price impact. Somewhere between, I don't know, 45 and 65%. For a master node, it's like 75 or 78%. For two master nodes, can't get it done. Is not possible. Can't do it. So we've kind of partnered up with Hypercycle to alleviate one more friction, and that is to essentially help us source tokens. Now, a lot of this will be solved by the OTC, but this is another way to accomplish it. So it's node licenses with tokens. It's already done. You'll get an NFT, and then come the 15th or the 2nd that software is available, your wallet will have the married tokens with nodes. We have to go through them and actually do the marrying and source the tokens and all that, but we've already taken care of the heavy lifting there. So you can get the tokens, the node licenses with the tokens that would already be married to them. Why does it only go to 64? Because down below 64, like when you start getting down to like 32 and such, you can just buy them on the exchange, or you'll be able to buy them OTC, the tokens, and then you can do the marrying yourself. There you go. Or you can just buy the licenses. Anyway, so that's what that part is. So we'll go back. Boop. Okay, so now we're here. We can explore the nodes. What does this mean? This won't mean anything yet. Once nodes and tokens are fused, married, and they're tilling, you're going to have a reputational score. Now, you might be running your own software, your own hardware. You might be on I think most people will probably be on a hyper AI box, or very clever people will be using their own equipment, and they'll have put in all the correct, like, yeses and nos and switches and all this kind of stuff. They'll make all that possible here in a few weeks. But some people will also put their node licenses with tokens at somebody else's facility, or they might go pledge them to HyperPG, whatever, through Hyperpools and all that, which looks like that's kind of becoming the same thing. Like right now, for all kind of queries about software and all of the dApps and all that, it's just going to be at HyperPG for now. They're putting it all over there. So you will be able to see not only your portfolio of nodes, but you'll be able to see how they rank, how they compare, how close you're getting to your first splits and all that kind of stuff. So all of those statistics will be there, but it's going to we have to plumb that. We can't plumb it until they're like sending out that data. So that's coming soon. But until we can like make the connections. Okay. And then, so that's where you'd go for that. You'll also be able to buy and sell node licenses with tokens that have a reputation all the way through their lifetime. Even if they split, because you might have split your node 6 times and from 1024, 512, 256, 128, 64, 32, like what the smoke? You see, you're just getting like more and more and more. Anyway, and then view the exchange. So you click view the exchange. This is where you'll actually come. And right now you're seeing it in terms of Ethereum price, but it will be, the listings will be all of the Singularity Net assets, Ethereum, USDT, USDC. You will be able to post offers to sell, take other people's offers and buy them. You will not have to worry about slippage. You will not have to worry about price impact. And you don't have to worry about people that want to sell large numbers of tokens, because it's not going to depth charge the price. This will make more sense in a little while when we talk about it. But right now you're like, I don't understand. Well, if some old fat ass whale who bought early on wants to dump 1 million tokens right now, that would compress the price. Like if we go Hypercycle. If we go look at this price, 94 cents. Well, look at it. I mean, well, a few minutes ago, it was 99 cents. But okay, so yeah, think about that. It went from 99.5. So basically it went from in less than 2 hours ago, It was basically $1. It's now 94 cents, 95 cents. Why? Not even on a lot of volume. Okay. But look over here. You look at all this volume, and what do you see? The price got gutted from 97, 98 cents down to what? 92 cents. Why? Because there's not a lot of liquidity. So the price impact is that as you're making a sell order, and it's basically eating offers all the way through the order books, it just keeps going down, down, down. It's like a bad version of a market order, and you get your ass handed to you. So guess what OTCs do? They get rid of all that because it's a wallet swap. So you don't get your ass kicked. So this price of 99 cents stays at 99 cents. You could sell 100 million tokens. Makes no difference. That's the beauty of going wallet to wallet. It's also the beauty of crypto and the beauty of not relying on shitty illiquid exchanges. Exchanges suck. Decentralized exchanges are just marginally better than the centralized exchanges that suck. The only thing is you don't have a bunch of humans in there meddling. Unfortunately, you don't have a bunch of humans in there meddling, so you don't have a lot of liquidity. So it would smooth the price quite dramatically. So just keep that in your mind. There you go. Yay. All right. We're not going to talk about prices and all that kind of stuff. That's not typically what we do on this particular show. Office hours. That's more of a digital investor thing. But there we go. All right. Let me look and see if I can nab a couple of other questions before we get to our core kind of schoolage. Who will get the boxes? Well, they'll have more refined ordering process, but I mean, ordering will be easy. I think they start shipping on the 15th. So I'm guessing 2 or 3 days before, maybe sometime next week, there'll just be a straight click here to purchase. I don't think they've finalized the price yet. Even today on This Week in Hypercycle, Tufi had said something in the range of $1,200 to $2,000, but there's some people that are subsidizing the price of those boxes. Like they'll buy the boxes and help people like pay less for the boxes, ship them out, and then get a percentage of the income and all that. There's going to be all sorts of deals like that going around. So just give it a few days, I'd say. All right. What are your thoughts on Sophia? It keeps fading down. Well, they're not really talking about a lot of stuff, but I wouldn't be selling Sophia. Me personally. I am actually purchasing Sophia, even though I have a pretty good chunk of it, because these metaverse plays, the more people that slap on virtual reality glasses, the more people that participate. I mean, it keeps getting validated more and more. You're going to see more onboarding with the Oculus 3. You're going to see more onboarding with the Vision Pro, or whatever the F they call it over at the fail that is Apple. So they haven't really talked a whole lot. My guess is they'll have a lot of kind of exciting things to announce, but those teams are good about not pre-announcing like nonsense if they don't have something important to say, or if they're locked into NDAs and things like that. But they're certainly doing a lot of work. All right. I have all the tokens needed to fill 64 nodes, paying a low of 25 and high of 95. Well, yes, you have some average in between, but Sam, you're still below market by quite a bit. So I think you did good. Why is there no I don't know, hyper market cap on CoinGecko? I don't know what CoinGecko is, how it works. I don't know. Don't know. Can we marry the tokens to nodes on your node market? Listen. If you buy node market, is just the arm that is selling nodes for Hypercycle, the company. They're not ours. They are theirs. We are just handling the sales effort. So people get all weird about this, like not you, but like people get all weird, like, how dare you? How dare us? Nothing. We're just the ones handling the sales. That's it. We make them in our back pocket. Here's a node for you, sir. Yes, wallet to wallet. That's the beauty of OTC transactions, over the counter, not pinging exchanges. Let's see. If we till on our own computer and then we change over to an AI box, do we lose the history? No, because I think that transition would just take like a few seconds or like a few minutes. That's not going to beat you up. And you don't lose all the history. You would have a little bit of downtime. But I don't think it would be significant. Okay, about the AI box. For tilling, it can handle one master node license of 512, yes. But when compute starts, it will handle one node, yes. No, you wouldn't buy 512 boxes. I think what it would allow you to do, Bill, is see if you want to either scale into some bigger equipment or send that over to send your tokens and nodes over to a facility, either like HyperPG or HyperPool, or a private, like a pool. Someone else might be running a pool. Like we have some people in our community that are building out infrastructure for facilities, and they will have, they'll say, hey, listen, we have capacity for 10,000 node licenses and, X amount, 10 million, or tokens or whatever, right? Like, so I'm sure that they will sort all that out. Yeah, but for now, the Hyper AI box would be for tilling. And then as we get closer, remember, they're doing all this kind of software iterative stuff. And so the closer we get to March, the more granular information they'll have for everyone. A lot of times people are just kind of getting ahead of their skis. And remember, this was an 18-month roadmap. And we're only in the 4th or the 5th month. So, I mean, let them at least get halfway. Is there an FAQ on hyperpools? Not yet. I think they're developing all that. So yeah. Let's see. Question. Let me click it. Oh, there we go. If we have 2 node licenses and we use Hyper AI box, you mentioned it would support 1. Yeah, I think it will support 1 or 2. They're just saying 1 so that people don't get pissed off if it's like not super, but I think you'll be fine. Like 2 nodes, my bet is that even for compute, it would work. There's going to be other boxes, and also they're going to release information here by again on This Week in Hypercycle, which comes out here at 10 a.m. 2 Feet told me that they're going to be releasing the more information on exactly what your equipment would look like to be the most efficient. Like, is it RAM intensive? Is it like things like that? So they're going to have all of the details about January, February, so that before compute starts in March, you would know, should I run more AI boxes? Should I purchase an Apple Mac Pro? Should I go purchase this or that, rig? And should I get in line for an A100 or an H100, or leverage into a cloud that's using whatever? You'll know much more what to do January and February, because they're doing a lot of testing in the background, but it's not like there's so many different variety of computers, and they have to be testing all of this stuff to get some stats back. Yeah. All right. If there's a profit of $1 and I'm in Hyperpool, how much do I get? How much is, well, Sam, you need to give me more details. Did you give your tokens? Did you give your nodes and tokens? Did you marry them? If it's nodes, I can give you the basics. I can give you some basics. This is the basic rev share through Hyperpools. And remember, Hyperpool, they're doing all the work and then they're splitting the revenue with you. The token holders are going to grab 20%. The license holders are going to grab 12%. People that contribute hardware, 32%. AI code, 25%. Location, energy, 1%. Hypercycle Corporation, 1%. So there it goes. So you would be getting, if you submitted tokens and nodes to them, you'll be getting 32% of whatever revenue they generate. And then, of course, as the nodes split, that would be more. So I'm probably going to put a good chunk over there, me personally. Yeah. Okay, so there's that. All right. Let's see. Okay, I heard that's only going to run on Linux. No, I haven't heard anything about that. I don't know those kinds of things. I don't know. If you own tokens and nodes, you probably look at 32% of whatever they generate. So 32 cents on that dollar. Okay. I think that gets through the basics, the Q's and the A's. Like I said, we'll stay away from the market stuff until we do our, our Monday, Wednesday, Friday digital investor shows are more market focused, more portfolio focused, things like that. And if you're interested, obviously, here's my opportunity to play that little bumper thing. Let's see.
Are you tired of all the uneducated noise you're getting from the droves of YOLO meme coin peddling douchebag gurus out there trying to use you as their exit liquidity? Would you rather learn a competent university-level set of skills that will guide you in managing and investing for the rest of your life? Join us 3 days a week at Digital Investor. Develop your knowledge of game theory, cognitive bias, macroeconomics, monetary theory, investment theory, psychology of the crowds, and more. For more info on Digital Investor and how it can help you, reach out at nickblacknext.com.
Woohoo! All right. Need to switch gears now. It's school time. We need to talk about price impacts, order books, slippage, fees, and all of the shenanigans that you're going to be faced with as you deal with the regular DEXs, and why so many people absolutely get their faces melted when they're trying to put in orders and they don't understand. And then they either have tons of failed transactions or they get filled at stupid areas. And all right. So there we go. So let's go ahead and knock that out. Oh, my favorite.
Hello. You're late.
You're bad at math, but I'm giving you an A+ in confidence.
Just doing what I gotta do.
Extra credit.
Okay. So as we talk about, you know what? I'm going to go to a different little music-y thing. How about this one? Ooh. You guys can't probably hear it, but I can hear it. I don't know how this damn board works. I'll be honest with you. I've done all the videos on the Rode Class A servo-based biased preamp effing thing, and man, it doesn't really help you so much. Yeah. Anyway, there we go. All right, let's get some extra credit. So today we're going to talk about something that seems to plague a lot of people, and it is we need to discuss. These are all of the reasons why right now in this illiquid crypto space, it's hard to get orders through. It's hard to get orders confirmed. And you guys are already much more capable. If you've used a DEX, if you've used MetaMask, if you've used Uniswap or Pancake or any of these kind of other, I hate things named after food, but whatever. But if you've used any of these DEXs, well, congratulations to you, because you're already much more adept than like every stockbroker on the planet that pretty much just uses their old traditional exchanges. So you've gone from the banking system to the Coinbase or the Kraken system, or however you took your fiat currency and turned it into cryptocurrency, whether it's stable coins like USDT or USDC, or whether it's Bitcoin or Ethereum or Cardano, or, go down the list. So you've done all those things. Great. And then you push those over to a DEX, either to a wallet that has the ability to connect with DEXs like MetaMask or some of these other wallets. And then you have all these other things that pop up. And so it's like you're behind the wall, like 4 layers deep. And so now it's important to kind of start understanding price impacts, exchange fees, slippage, order book depth, and amplified price impact. Say amplified price impact. What the shit? Yeah, that's right. I said it. So I want to explain these differences so that you guys understand, one, what some of the limitations are, especially with newer or newly issued assets that are less liquid. 2, so that you understand why an OTC market makes a lot of sense. Oh, also, by the way, do you think institutional investors go to Coinbase and buy off the exchange? Well, let's just see a quick. How do you think institutions fill big orders without moving the market? OTC. They do OTC transactions. And they do OTC transactions because it doesn't move the market, because it's just wallet to wallet. The only time people buy on regular exchanges is because they are signaling The only reason, I mean, I could, it's you either, there's a couple ways to signal. One, you send a bunch of tokens to an exchange and then the news gets out. Oh, someone transferred a bunch of tokens to an exchange. Or you take a bunch of tokens off of an exchange. People say, oh, they took a bunch of tokens off of an exchange. And that used to mean something. Now everybody just goes, that's just a bunch of signaling bullshit. Or you go buy tokens on an exchange, like MicroStrategies. Oh, look at me. I'm buying Bitcoin on the exchange in front of everyone. Okay, great. We get it. You red-faced signaling douchebag. We get it. You're a degen, and this is how you're letting the world know you're still participating, that you're not bankrupt yet, and that you didn't get rubbed out for tax evasion, which you absolutely participated in, but that's a whole other story. So anyway, the whole point of all this is when you actually want to manage a business, you don't want price effects. You want a clear and consistent price when you enter and when you exit and when you manage your balance sheet. So, an OTC scenario is how this happens. But none of this really seems all that exciting if you don't understand the slippage part of it and the idea behind price impacts, order books, and all this kind of stuff. So let's get into it. So price impact. Okay, it kind of makes sense, right? Like you can kind of just talk your way into it. But price impact is the effect that a trade has, an individual trade has on the price of a particular asset. This makes sense, right? If I'm selling XYZ token, it's probably, I'm going to flood the market with a sell order. It's likely to eat up those buy orders and the price would go down. If I'm buying from people that have sell orders. And so order book wise, it's going to eat up those orders and the price is going to go up. But price impact for us is the effect that a single trade would have on a price of any particular asset. And this is associated with the size of the trade relative to the liquidity of the market. If I want to buy 100 tokens, but there's only 10, what do you think is going to happen to the price? If I want to sell 100 tokens, but there's only 10 tokens to be of purchase orders, what do you think is going to happen to the price? Large trades significantly move the prices. And again, it's relative. Large trades relative to the liquidity in the market, they significantly move the prices on a DEX due to the lower liquidity levels compared to the centralized exchanges. Okay. Slippage. Slippage refers to the difference between the expected price of a trade and the price at which the trade is executed. If you see, you're setting up a trade in MetaMask and you see 10% slippage, you need to realize that your $1 worth of purchases are going to cost you $1.10, or your $1 worth of sales are going to only net you 90 cents. That slippage number is pretty damn important. And there's also bots that get ahead of you when they see orders come in, especially the bigger the orders. The bots will jump in there and they will eat your lunch. They will take advantage of any slippage you allow. So it's common in both centralized and decentralized exchanges, but this slippage can be much more pronounced in these low liquidity environments and DEXs, because during volatile market conditions, or when trading is, predominantly in these illiquid markets, and these are all, anything on a DEX right now is pretty illiquid, short of Ethereum or some of the stable coins. But these are very illiquid markets still. The whole thing's only like 1 and change trillion. We're still talking about very, very, very tiny entire market cap. Yep. Okay. So slippage can happen due to price changes between when a trade is submitted and when it is executed. In that time in there, did bots get in front of you? Did other people execute trades that took away some of the potential tokens you were going to buy? Therefore, you had to go deeper in the order book. And so these kinds of weirdnesses create slippage, and slippage directly impacts the finality of your trade. The more slippage, the worse. If you see these slippage, to buy a master node of tokens, 524,288 hypercycle tokens, for example. To get that order filled, it's not going to fill. You're going to experience slippage of, it's going to tell you between 70 and 80% slippage, meaning you would spend $1 $1.80 to get $1 worth of hypercycle tokens. Basically, you'd be paying $1.80 per token, $1.75 per token. But good news is that order probably won't even get filled anyway, because the liquidity is so low, and the other bots would jump in, other orders would get filled. You might not get filled at all, and then the transaction just crashes. So you have to pay attention to the slippage when you're setting these transactions up. Okay, let's talk about exchange fees for a second, because some people they forget and they do their math wrong. Make sure when you're setting up a DEX. Oh, hush, shut up. I must have said something that rhymed with Siri. Now she's being a dick. Stop. It's just like waiting. It sits there with the little blob waiting. You stop that. Anyway, exchange fees, you need to factor those in. Like on MetaMask, I believe it's 87 basis points, 0.87%. So 87% of a percent, or a little less than 1%. But you got to add that on, because if you had 2% slippage and you did your transaction and you're like, wait a minute, I don't understand where the money at. You just lost another almost 1%. Now, that's not terrible. 1-2%, that's not terrible. 5, 7, 9, okay. I've actually had, like when I was moving tokens back and forth, sometimes in arbitrage situations of low liquid coins, you would see slippage of like 18, 19%. You're like, oh, God, I'm giving back the arbitrage. Yes, factor it in. It's not just the sticker. It's not just the price on the sticker. But anyway, exchange fees on a DEX are the costs associated with them facilitating a trade. So they include liquidity provider fees, protocol fees. So unlike centralized exchanges like Coinbase or Kraken that have a very clear fee structure, which usually it's similar or sometimes even higher, but it's very clear what those fees are. On DEXs, it can vary pretty widely between different platforms. So even setting up a transaction like on MetaMask, like a regular transaction, and then doing the same transaction on Uniswap, those are going to have different fees because they're using different routes to complete those orders. Does that make sense? Anyway, they're sourcing liquidity in different ways. And like with MetaMask as an example, they'll go through a bunch of different bridges and do all sorts of cool stuff, but they're going to have to pay exchange fees as they bang around. And you're going to they're going to aggregate those fees, put their fee on top of that fee, and you're going to end up with some resulting fee. Anyway, these DEX fees are usually a percentage of the trade amount and are used to incentivize liquidity providers, and that's how they get paid. And so this supports the ongoing development of the DEX. So understanding this, that you're going to have price impacts, which can be a big percentage, because you go into a trade at this point, but go pilfering the order book changes the outcome of the trade. You're going to have slippage. You're going to have exchange fees, period. You're not going to get around exchange fees, but you can get around slippage and price impact. And that right there could be 50, 70, 80%, or just simply failed transactions. So pay attention to price impact, pay attention to slippage. By the way, when you set up a trade, especially like on the DEXs, like if you go to use Uniswap or you go to use like Pancake or whatever, you can see before you do a trade, scroll down and look, and it will show you price impact, slippage, fees. Like you'll know everything you're going to be dealing with right there, and you can make an educated trade or just decide not to and opt out and use an OTC. All right. In decentralized exchanges, assets are traded through liquidity pools rather than through an order book. I mean, we call everything an order book, but it's not really an order book. Their DEXs use pools of liquidity with asset pairs. Okay. So it's not quite the same situation as on an exchange where there's a bunch of buyers and they have orders. Those are in green. There's a bunch of sellers. They have orders. Those are in red, right? This is not that. So the concept of going deeper into the order book on a liquidity pool still applies, because they're still facilitating transactions back and forth. So let's now talk about price impact with larger orders. When you place a large order on a DEX, okay, you're essentially demanding a significant portion of the available liquidity in that pool for a particular asset pair. The first part of your order might get filled at a good rate. But as your order continues to fill, it starts to exhaust the availability of liquidity, and this affects the price unfavorably. That makes sense, right? If there's only 10 tokens in the pool and you want 9 of them, the price, if you had wanted 1 or 2, is going to be pretty good. But as you get deeper and deeper, you're going to have a worse situation. You're going to get filled at a less favorable rate. As a buyer, it's going to be more expensive. As a seller, you're going to get paid less as you go deeper through the book. And this affects the price in an unfavorable way. OTC is better, right? A lot of the people don't realize, like, Brandon and I build tools that that we want to use. And then we say, like, oh, could other people use these? Yeah. But like, I'm not going to say we're building it for us, but we definitely built this with the mindset of the digital investor community and the digital private clients being able to get in and out of assets without having price effects on the market. The other thing is, and this is not an ad, this is an ad for OTCs. But by the way, Coinbase has an OTC. If you're an institutional trader, you can go to Coinbase and you can facilitate OTC transactions. All these big exchanges have OTC desks, all of them, because they might have some guy with $43 million worth of Bitcoin that just wants to be like, hey, I would take $43 million worth of stablecoin. Okay, cool. And they will go and they will source the partners and they will do it. They just use actual humans mostly in the middle, whereas in an OTC, a code-based OTC with a smart contract-based OTC, there's no fat, rich white dude in the middle. There's just code. So that's what we did. We just built a code-based centralized, decentralized OTC where a buyer and seller can meet in something similar to barter and agree or whatever, and the trade is done, wallet to wallet, and no one is any wiser. And depending on your regulatory system of taxing and such, it creates an environment where you may not want to cash out to dollars, right? You might just want to do like a trade for a trade, an asset to an asset. You might want to go hypercycle to Ethereum to AGIX, whatever. Depending on where you live, that might or might not even be a taxable event. You don't want to create a taxable event that isn't. You go to a centralized exchange like Coinbase, your shit is getting sold to the Treasury Department, right? So just understand that. And again, I'm not talking about tax avoidance. I'm talking about making sure that you're doing the wisest thing with your portfolio at all the time. So if you're going to source a big sell or purchase, you would do it through an OTC so that you don't F everyone else with the price impact. You don't F yourself with the price impact and the slippage. And you don't F everyone in some kind of weird taxing situation. Okay, so carrying on. Let's talk about order book depth. You hear about order book depth. Okay, I get it. On a centralized exchange, I see the big pile of green orders. Those are the buy. That's the buy side. Those are all buy orders for a price. And I see the red ones on top. Those are all the sell orders. And usually there's a spread in between, right? That spread could be looked at as a little bit of slippage, depending on if you do a market order. If you do a market order on a centralized exchange, now you're going to have a dump truck's worth of price impact and slippage all hitting you kind of in the same way, but because there's more liquidity on the exchange, you're likely to be able to kind of calculate in your mind where that market order is going to get filled. You just hope people don't pull orders while you're doing a sell or pull orders while you're doing a buy, because if it's a market order, it's filling the number of tokens. It doesn't give a crap about the price. So you can get whacked. You can get really messed up on those, especially if it's low liquid tokens. But centralized exchanges have higher liquidity. So again, getting around that and understanding the situation helps you appreciate why OTC makes more sense. And even if you don't use an OTC, which fine, don't do you, but you won't get pissed off when you look and you sold $40,000 worth of something and you got $22,000 in your wallet. And you're like, I don't understand what just happened. Let me hit the reset button. There's no reset button, bro. Your shit is gone. You sold it. for dust because you just didn't appreciate price impact, slippage, and such. Okay. So in these traditional exchanges that have buy and sell side order books, the concept is similar, but it's slightly different. So an order book lists all of the buy and sell orders in the market with the prices determined by supply and demand. So when you place a large order, you eat through that order book, getting your order filled by matching with several orders at progressively worse prices as you go deeper, right? From this price, if it's at $1 and you're selling a bunch, it starts going into the 90s and maybe the 80s. If you're buying a bunch, it starts going from $1 and it starts going up because it's eating through those orders, especially with market orders. With limit orders, you're saying, I only want this price, which is great. So the OTC is is basically the not real-time version of DEX-based limit orders, which I know a lot of people are like, Jesus Christ, that's a lot of words. I know. But anyway, just kind of reduce it to the simple. So this is because the most favorable prices near the price are always filled first, and then progressively less favorable prices are used to fill the rest of these orders. That should make sense. So that's order book depth. And you can just go to any centralized exchange and you can look at the depth. You can say, okay, Bitcoin is at 27,400, but if I was to buy 100 Bitcoin, it's going to cost me 29,000. If I was going to sell 100 Bitcoin, it would start selling at 27,004. But look at those orders. That 100, maybe it goes deep, 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 deep. Now I'm done at 26,000. And guess what you do? You do your sell order, you get filled, you lose money, and the market cap goes down by $40 billion. And everybody's like, everyone's selling that. No, man, one sell order that pierced the order books on one exchange. And then the robots propagate that information out and all the other exchanges. Oh my God, there's an imbalance. And some will try to arbitrage that. And that's how it all is, right? Because again, illiquid assets on illiquid exchanges being traded by sketchy ass, mostly dubious individuals that probably don't have your best interest at heart. And now we need to talk about another issue. So we talked about price impact. Now we need to talk about the situation of amplified price impact. And this is, well, it's a simple concept. The larger the order, the deeper you go into the liquidity pool, or on a centralized exchange, the order book, and the more significant the price impact will be. It's not linear. Okay. It's more, it's almost log, but not quite. So essentially, this is because each subsequent portion of your order is being filled at a less favorable price, and it moves the market price progressively against you. And this phenomenon reflects the core principle of supply and demand. Now we're back to microeconomics, right? As demand increases or supply decreases, prices rise. As demand decreases or supply increases, prices fall. All other things, ceteris paribus, other things being equal, right? All things being equal. So this idea that you can have an amplified price impact that isn't simply a little tiny minuscule difference as you go deeper, but there's a point where you've gutted the order book, especially for these illiquid assets, and you could get punished to infinity and beyond, right? So this concept is crucial for traders and for investors to understand. Obviously, everybody here at some point is going to take an exit, and that's okay. And you should, and no one should feel guilty about selling ever. You bought something, you fucking deserve to sell it whenever the fuck you want. So don't be, when you see people like, oh, in the chats all the time, oh man, weak hands selling. That's all bullshit, diamond hands. Get the fuck out of here. There's no such thing as diamond hands. Paper is shit. If that thing, look, if Bitcoin goes to $1 million, all of these diamond hand dudes that are talking on CNBC, I'm never selling. Bullshit. They'll sell everything, including their fucking kidneys. Why? Because the price will make sellers out of everyone in the same way that the price will make buyers out of everyone that likes an asset, right? So don't ever feel bad about selling, okay? But you owe it to yourself and to an extent to the community to do it in the best way for you and the best way for the community. Don't depth charge everyone else. So if you have a way that you can avoid bad slippage, you can avoid the price effects and amplified price effects of using DEXs because you're in a new market, you're in a new space where there's not a lot of liquidity, then you have a responsibility to you and to the community that helped you achieve this to do it in a responsible way. So use the OTC. And none of this shit applies to you. So anyway, that's kind of, I wanted to spend some time talking about that because I think a lot of people miss the whole point. So, and again, Sean, if the token is not on a centralized exchange, you're using DEXs. And if you don't like the price of DEXs, you use an OTC. And if you need an OTC, it'll be launched in the next few days. That's why we're building this. And this is mostly and specifically for the Singularity Net ecosystem of assets, which is why you see Singularity DAO, Hypercycle, AGIX, Rejuve, Sophia. You don't see Cogito yet. It's not a design concern for us just yet, but yeah. Yeah, it's going to make it easier. And again, no one has to do any, you can do whatever the hell you want. I just don't know why someone would purposefully throw money away and punish the community at the same time. Because if there was an OTC, let me show you something. This price right now would be still $1.18. If there was an OTC market right now, this is where everybody would be. $1.18. So you tell me, would you go, and again, it doesn't matter. You're just looking at your portfolio. But would you rather look at your portfolio with Hypercycle at $1.18 or at 94.2 cents? I mean, they're both still great. Don't get me wrong. But do you see what I'm saying? So if you had a place to go where you don't have to deal with slippage and you don't have to deal with these price effects and you don't have to deal with amplified price effects of this low liquid stuff, you should at least entertain that. And if you're doing, for those of you, there are some people listening that are looking for bigger purchases. Like I know, well, I'm not going to say who, but I know someone who has like a lot of master nodes, but not the tokens. You have to use an OTC. You do not have a choice. You cannot get filled. And what do you think is going to happen October 15th? Do you think the situation with these tokens in the order book is going to get easier or harder or more difficult? Tokens going to get married to the node licenses. People aren't pulling those out. Doesn't matter if the token goes to $4 because the Hypercycle token doing a 4x is not shit compared to what your node licenses could do with 6, 8, or 10 splits. That's magnitudes of compounding effects versus like a 4x. So I just think, it makes sense to do what's best for what your goals are. And if your goals are to get some tokens, to marry to some nodes, do it in the smartest way. If you don't own either, and I'm not telling anybody they have to do anything, do whatever the hell you want. I don't care. I know that I'm going to do a little bit of everything. I'm going to have tokens that I hold and try to collect yield on that. I'll probably I've already put a bunch, but I'm going to put the rest of them at HyperBG because I like 9%. That's sweet. I'm going to have tokens that I keep over at Singularity DAO until I see how the compute stuff rolls out. I'm going to keep tokens married into node licenses and have them tilling to be driving up the rankings, getting me closer to those splits. For me, it's all about the split. I want the split. I don't give a shit about anything else because to me, even if compute isn't paying all that well at first as they roll that out, I don't care. I want the compounded effects of splits. I want splits because whatever the compute rewards are paying you per node, let's say it's 10 cents a node. If you have 1,024 times that, it's still real good, bro. like one node is getting you like $37,000 a year. One Uno, right? After 10 splits, which you could get technically in as fast as 6 months 6 month intervals. So in 5 years, you could be sitting on that. So I think, and no, Jerry, everybody here will be able to take the role of priest or religious entity for the sake of clicking the buttons it takes to marry your tokens to your nodes. That would be cool. We should do one of those accreditation services. I got licensed as a minister for like $8 from the what was it called? Universal Life Church. Oh, what a scam that is. It's an accredited university. I actually did one of they have these doctorates you can get. Yeah, everybody here, you can become a doctor. Did you know that? It's accredited. They have to put it on your license. If I want to, I could be Dr. Black. I don't do it because I think that's too dickish. But whenever I go to parties and there's somebody and they're like, I'm a doctor, blah, 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 and it's one of those fake doctors, like doctor of, whatever, like not like a cut on you and bring you back to life doctor. I'm like, I'm a doctor. They're like, what? I'm like, yeah, did it in my spare time. I actually have what is it called? I have the certificate somewhere. It's a doctorate in the philosophy of religion from the Universal Life Church. Accredited, bro. I should put it on my license. Just to F you all those doctors at parties that try to big dick it. Anyway, that was a weird segue. But yes, Jerry, you are the first official priest, hypercycle priest. And you're a priest, and you're a priest. Anyway, it's all quite silly. That's right, doctor. And they're like, can you bring this man back to life? No, but I can send him to the afterlife. And explain to him node marriages in the process. All right. Well, yes, Hyperpool keeps, but remember, they're the ones spending money on electricity and facilities and computers and keeping all that crap running. And you just have to decide, do you want to do all that? So for me, I'm going to do a little bit of all of it. I'm also going to run some Hyper AI boxes because I want to see in real time what it's doing. And keep in mind, we don't know what we don't know. So we're going to be getting we're going to be getting an overload of information over the next several months. So I would and also, peeps, there's other tokens. There's a whole other ecosystem out there of quality assets. Some of them, not XRP, but there's some quality assets, right? Look at Cardano, not a bad week. But my point being, there's an entire ecosystem that is about to go into what I believe is going to be a very bullish expansionary phase. Everybody's going to be doing quite well. Yeah, that's the thing, Lance. This is the key. 32% for not doing much is awesome. Dude, I'm happy with 9. Go out and look where you can put your money and get paid for doing nothing. You got to do something. Well, the something you're doing is grabbing nodes, grabbing tokens, marrying them together, or just grabbing licenses and pushing those, or just grabbing tokens. That's the whole key. Is one of the reasons this is kind of confusing is because they wanted every single group to be able to participate. No one gets left behind. No secret societies, no little bullshitty handshakes. Oh, I'm part of this group. I get special. Bullshit. Everybody gets to participate from the beginning. Everybody. No special interests, no special groups. I know that angers a lot of people that thought they were getting some good old boy discount. Does not work that way. Everybody gets to play. Everybody. That's the cool thing about it. Anyway, let's call it a day. Let me see if I can knock out one more. Frank, when do you think the ROI will drop to, yeah, they're going to sunset that. So I think it probably goes down to like 3 or 4%. But that's when okay, it's time to push over. Basically, when the Singularity DAO pools get to like 9%, I'm going to book it out of there and I'm going to take whatever I've got left and either go pledge it to PG or pledge it to Hyper Pools. Most likely that's going to be in the same place at Hyper PG. You'll just click on where you want to put. Do you want to get a fixed percentage? So, and again, I don't want to get over my skis and say things that we don't know for sure, but that's the way that it's been explained to me that's going to run for now. Anyway, for those of you, please check out This Week in Hypercycle, which is actually normally would release tomorrow. It's releasing today. It's releasing in 1 hour. There should be at 9 a.m. my time, which is Pacific. I'm on Pacific. In 5 minutes, the video I think will announce, and then you just watch it. There's a little part in the middle of about 2 minutes where the video feed goes out for him, but it's not a problem. It's always great to hear from Tufi. Yeah, and he's in Geneva. Who knows where he'll be now because he got on a plane. So there you go. HyperPG and HyperPool. Basically, HyperPG is a partnership between Hypercycle and Penguin. Penguin's going to be running these big hydroelectric facilities, and HyperPools is a way that every single group can plug in whatever resources they have, tokens, hardware and tokens, tokens and licenses, license plus tokens, or either one. They'll be able to plug all that stuff in, and they'll be able to get paid a reward. With HyperPools, you get paid a percentage of what they make. With HyperPG, you get paid a fixed percentage. But it's all coming from it's all Hypercycle. These are all Hypercycle ventures to expand the ecosystem. Okay. Whew. Stay in school. Yeah. See you in an hour. Please throw a like on this video, because as you can tell, there's no commercials because we don't do any of that bullshit monetization. So, and then and because we don't, they can't tell us what we can and can't do. That's the other thing too, right? Like we don't have to listen to what they say at YouTube because we don't take their money. So yeah. All right. So stay in school. That's right. Doctorate in the philosophy of religion, which is a completely made up bullshit thing, but I got it. I took the coursework. I did the thing. I paid the money, and now I'm a doctor. I'm quite the doctor. All right. See you guys in the next one. We'll see you tomorrow also for Digital Investor.
If you're an accredited investor and you want in on angel, seed round, or early round equity and token opportunities in the artificial intelligence and cryptocurrency space, schedule an interview at nickblacknext.com. In life, you can either be really good, really lucky, or just be first. Being first is so much easier. Schedule a digital private client interview today at nickblacknext.com.